Hello everyone and welcome to Leverage Monkey's analysis of Bitcoin. In this video I'll present the liquidity void that lies below 30K, the CME gaps and possible areas where Bitcoin could stop as areas of potential support. Now let's get started. In this chart you will see, first we'll start off with the Elliott wave corrective triangle. As you see here, was created with the A, B, C, D, E. In Elliott wave 4, Elliott wave 5 final capitulation should be lower here. As you know, Elliott wave 5 final capitulation. So here is the Fibonacci retracement levels here. We have 100% at 28,800. The extensions 1.236 at 25,840. 1.382 at about 2400, and then 161.8 at about 2100. In shorting, aggressive extension is 168.1, so there's a potential that we do not reach all the way down there. There's a potential that we cross over the 138.2, and that being the final low for the Elliott wave Elliott wave 5 final capitulation. That doesn't necessarily mean that Bitcoin won't go lower. It just means that's where the Elliott wave 5 will end, somewhere between 100% and 161.8 is the most likely range. 161.8 crossing over that is aggressive shorting. So buyers, institutional buyers, investment funds may step in before that and offer area of support. So that's based on the Elliott wave corrective triangle as a possible areas of support that could potentially come in. Now we'll move on to the orange line, which I had you guys add to your charts a couple weeks ago. The orange line comes from the old all-time high and the December 2020 consolidation. So that's where that orange line came in at, that I had you guys add a couple weeks back, and that sits at about 2,500 right now, and as you can see, it's slowly rising. The green line is the 21-week EMA. As you can see, it's rising. In past bear markets, you see we come down, we have a bounce, we come back down, we bounce again, come back down, we ride along the 21-day, and then we break below the 21-day where the whales begin their accumulation. And then they bring it back up, they rally, they come down for one final capitulation and accumulation, and then they start the markup for the distribution. So that's pretty much what happens in the bear market. As of right now, we're doing the exact same thing that happens in a bear market. The only thing is we haven't had the bounce that we normally get. This time we do have a Wyckoff distribution, which is clearly institutional manipulation. As you can see, last time we had the vertical blow off top. This time we did not get that. We got the Wyckoff distribution, which is institutions distributing their shares and then bringing the market down to reaccumulate. I don't have it marked out here, but this is a Wyckoff accumulation pattern that was here in 2020 before they started the markup. So we wanted the institutions in Bitcoin, we got them. Now we got Wyckoff accumulation and distribution to deal with their manipulation. So moving on, we're going to go into liquidity voids. There's going to be a link. I'll do a link. There is someone that explains liquidity voids and order blocks really well, so there's no point in me making a new video. I will share the link of that below in my analysis or later on my Twitter account, Leverage Monkey. So let's get into it. The first liquidity void below 28,800 and is the reason why Bitcoin needs to hold 30K support right now is, first off, the 30K support is about the 1.618% retracement, fib retracement. And in past cycles, the 161.8 has acted as support and held. Usually in Bitcoin does not go back to the all-time high. In all of the pasts, it has not. It's had a good buffer from the all-time high to where it accumulates, which is normally about the 61.8. So breaking the 61.8, the 30K Bitcoin level is pretty significant if it falls below and stays below. So the liquidity void starts at about 28,800 and goes down to the first blue line, and then goes down to the second blue line, which is about 2,400. And a liquidity void is basically where price moves up very quickly and there's not much backfilling. So it's pretty much a straight up shot. And as you can see here, there wasn't really any time where we came back down into that area. So this creates a void of liquidity. And liquidity voids usually get filled. And also this void coincides as well with the CME gaps. There were CME gaps up from 23,650 to 26,550. So this CME gap and this liquidity void are lined up, of course, because that is what happened. Is there wasn't much selling there wasn't much backfilling. It was just pretty much FOMO, straight up price action. Then you have down here this little cluster, the December consolidation that we had. This could act as a small area of temporary support. It's not very significant, but if Bitcoin does drop, it could act as an area of support. So you see here we have the orange support line, potential support line at about 2,500. We have the 1.382 at 2,400, and then we have this area here. So 25 to 2,200 looks like a good possible area for Bitcoin to stop for a little while. It could stop there and accumulate and go back up, or it could stop there and continue down. There is a second void that starts at about 21,850 and goes down to about 20,000. So there's another liquidity void there. As you see this green engulfing candle, it was pretty much straight up. There wasn't much back and filling or liquidity stops put in there. So liquidity voids, normally, people don't have their stop losses in there. They don't have their accumulation in there from where they bought. They don't have those particular things in there. So that's what creates the liquidity void. And liquidity voids are perfect for institutions to go back and backfill and accumulate in those liquidity voids, because it's just very easy for them to get to. That's why we're here right now, is we're consolidating here. they are looking for people to potentially put their stop losses and stuff in here. They're trying to create liquidity in here to where they can go down and capitalize off of those people. So right now they're going to hover above, let people accumulate, maybe at 32,000. They're going to put their stop losses somewhere into the liquidity void, and then that's when they're going to come down and they're going to look. They have algorithms that hunt stop losses, so they're going to come down and they're going to look to find those. And pretty much a liquidity void, they collapse sometimes pretty quick. Because there's not much liquidity in there. So they just like they do the vertical up, they tend to do the vertical down as well. So we have the Elliott corrective wave triangle with the Elliott wave 5 final capitulation somewhere in here. We have the 21-day EMA. We have the all-time high December consolidation support line, and then we have the two liquidity voids that actually line up with CME gaps as well. There's huge CME gap in this void, and then there's another CME gap up in this void as well. So those are potential areas of support that could come into play if Bitcoin and possibly when Bitcoin breaks below the 30K level and comes down. As you can see in the past bear markets, we have come down eventually to the 21-day, break below. This is where whales accumulate, bring us back out, break back below, accumulate again. They distributed here, came back down, accumulated again. And then this entire thing was a Wyckoff accumulation, and then start the markup and do the distribution after they get the media hype in with the markup. They distribute to the retail with the media's help. So just to recap, the most likely area of Bitcoin stopping, as you see here with this and the Fibonacci level 138.2, along with the support line at 25 and below the 21-day EMA, looks to be somewhere between 25 and 22K is where Bitcoin is going to stop and maybe hang around for a while, and could be the bottom, or it could hang around a while before it goes down here to basically the old all-time high, down into, looks like it will possibly dip into the high 15s for this area here of support and consolidation. Other than that, lower than that, I don't really want to talk about, because I still hold a good portion of my Bitcoin core. And below basically 16,000, something is wrong with Bitcoin, and it won't be good. So hopefully we don't go there. I don't see us going there. The institutions will eventually come in and start value buying. That's the end of the analysis, and please subscribe and thumbs up. Follow me on leverage at Leverage Monkey on Twitter. Thank you and goodbye. Have a great day. Have a great weekend.